to be
But
strong.
now, okay, it should be expected to gain even more
So
strength.
we're technically, we're still expecting euro to break the current high that it has and then make another higher high. You know, but if it's not able to break that high, then we'll see the euro coming down. That's technically. But from the economics point of view, the global economy is actually going to determine what happens to euro in the long run.
Okay, so basically the euro has always, can I safely say, an inherently strong right from, you know, before this US debt crisis started?
Like we know, the US economy has been very weak.
Well, so has the economy in Europe.
but if you look at it on the long term, the US economy has been really struggling with debt crisis and all that. So that's not really gone away. And so when you have a little weakness on the other side of the currency, or sorry, a little strong on the other side of the currency, you see the weakness of the dollar really showing. Okay. Yeah. Okay,
let's go straight into what we're doing today. Okay. We're starting off with Fibonacci. That is an analysis tool. We've talked about the candlesticks, we've talked about the moving average and all of that, but
now, you know, when you watch a lot of the tools we use in the currencies market, a lot of them have names that are derived from people's name. You understand? Because even
people who invented a particular
like if in sciences, if you check botanical names, they are created from names of people. In the same way, a lot of the tools we use, apart from very few, most of them are from people's name. For instance, you have what we call Bollinger Band. It was created by a man called Bollinger. You understand? So in the same way, Fibonacci is the name of an Italian mathematician whose name is Leonardo Fibonacci. You know, he was able to come up with a sequence of numbers which he noticed it's like almost in everything in nature. You know, those sequence of numbers, traders took it eventually to the currencies market, but it was actually nature. And if you look at, let me give you some typical examples, you know, of those. If you look at your hand, for instance, the arrangement of your fingers is a Fibonacci sequence. Because the Fibonacci is not just those numbers, it's the ratios that those numbers form. So if you have 1, 1, 1, if you add 1 and 1 together, it gives you 2. If you add 2 and 1, it gives you 3. 3 and 2 gives you 5. 5 and 3 gives you 8. 8 and, you know, you have what we call that Fibonacci sequence, those numbers. As you add in the previous one to the next one, you get what we call Fibonacci numbers. Then if you do a division of those numbers, you get what we call the Fibonacci ratios.
I believe that's what we have on the screen right now.
The human hand is a Fibonacci sequence. Yeah, you know. So, and if you check flowers, also been discovered that the petals of different flowers is also a Fibonacci sequence. Typical example, a butterfly cup flower has 5 petals. The chocolate has 21 petals. Different, discovered.
We have that on the screen.
Yeah, it's right behind you. Constantly, flowers have Fibonacci numbers as number of petals. You know.
I need to get this straight. When you say Fibonacci numbers,
yeah, those are the numbers.
The petals.
Is that 1? Is that 3? Is that 5? Is that 8? You know, those numbers. Nothing between. Flowers will never have petals with 7, because 7 is not a Fibonacci number.
Or are we talking odd and even numbers? That is
no. The core Fibonacci numbers, not odd and even numbers.
Because I'm trying to break it down to the various Fibonacci. Okay, tell us more about this Fibonacci.
It's also discovered, for instance, you see, it's like an observation. You discover that in nature. Typical example, our facial ratios, the height from your head to your eyes, from your eyes to your nose, from your nose to your mouth. It's also a Fibonacci sequence. And the matter is that the more closer the ratios are to Fibonacci, the more beautiful you are.
Oh, really?
Yeah, you know.
That's interesting.
So that's why all those things are in nature. Fibonacci was able to discover it, and that same sequence has been discovered to work in the currencies market also. You know, typical example, you discover that when rabbits mate, if you put 2 rabbits in a pen right now, every month, at the end of every month, because rabbits, you know, produce every month, at the end of every month, the number of rabbits you're going to see in that pen is going to be a Fibonacci number. You know? So these things are constantly in nature. You know, I think I have it there. These things are constantly in nature. And you have those, what this does is that when you see the fact that this is happening in nature, it gives you confidence as a trader to know that these numbers are not, or these ratios are not just gotten from space. There are things that nature supports. And
it has worked. I mean, I want to believe that Mr. Fibonacci, after he came up with this theory, he applied it to the currencies market.
No, not to the currencies market.
Oh, what the
theory is just generally for study of nature.
Who decided to take that this
Actually, I don't know
theory?
Who did that. No, I don't know who did that. But
has it been? Okay, just tell us how it's been applied to the market.
Let's look at it in the currencies market, for instance. If you look at if price makes.
What are we looking? What particular slide?
Now, what we're looking at right now is that, well, I'm not actually using the currency chart. I'm just using a simple illustration.
Okay.
If you look at price going in that place where I have the uptrend, price went up there. The way price moves is that people are expecting that when price goes up, it's supposed to have what we call a retracement. It's supposed to come down, pull back, before it pulls back up or totally comes down. It's been discovered that when price pulls down, it normally gets supports at Fibonacci numbers.
Okay, before completely going,
before either down, going back up or going back down.
Okay.
Yeah. So what that does is that it gives traders ideas of where price will probably turn.
And has it worked every time?
No, it's just like you can't have somebody that's the perfect Fibonacci.
Yes, but is it reliable enough for a trader to actually put it as part of his?
It's very reliable for a lot of traders. A lot of traders use it, and so it works. It's one of the most reliable tools that traders use to trade. It's because it doesn't tell you buy now or sell now. It gives you an idea. A typical example: if a pilot is flying a plane, for you that you are just a passenger in the plane, you don't know that they have radars that they use for flying. They have invisible things that they use for flying. Sometimes you wonder how do they locate airports and things like that. It's because they are invisible, like Fibonacci numbers, in sort of quote unquote invisible, that pilots use, to land. I don't mean pilots use Fibonacci.
They're not exactly invisible. If they have their radars, they have the guys down the runway who
when you look at the currencies market also, it's like it's invisible. But when you plot it, you begin to see those Fibonacci numbers.
Okay.
Because if you don't plot them, you don't see them. You have to plot it, just like they have to plot radars, for them to see it. So you have to plot it on your chart, then, you see it in the market. So that's basically what it's used for. It's used to detect support and resistance levels where price will probably turn when it does a retracement. Is there a success rate? Do you have a success rate for this? I can tell you categorically, Fibonacci in terms of predictability, it's about 70% accurate. The most important thing is
not too volatile and okay, continue.
The most important thing is that you also need to understand how to sort of interpret it, to see it work. You understand? And I want to understand that's part of what Alpari teaches. Some of it. Sure. Is it part of the basic course, or is this an advanced? No, well, in the advanced class we teach it more. It sounds advanced, but it's not really advanced. In the advanced class we teach, it in a more advanced way. But basically, it's what we're talking about right now is basic. If you check, there are two sides of the way Fibonacci is used in the currencies market. You use for what we call retracement levels. And we also have what we call extension levels. When price is going in an uptrend, it pulls back, then it has an extension. That extension level also, where you are predicting where price is going to go higher, Fibonacci is also able to tell you precisely where price is going, before it comes down again. And what this does is that it gives traders opportunity to put their take profit or stop loss. If you look at it, you see price move from A to B, you can see that. Then it pull down to C. I can tell you categorically that point C may actually be a Fibonacci level. But for you to predict that when price is going to go higher, where it's actually going to turn. You can see those ratios, 0.618, 100, 1.618. Those are Fibonacci ratios. And it tells you where you actually can take your profit or put your stop loss or, take profit. So it's like an invisible radar that's there in the market. And because a lot of traders use it, so it works. Because what happens is that immediately there's a Fibonacci level, people start taking their profit. What happens to the market? It stops because people are taking profit. Taking profit at that time. So it reacts to that Fibonacci level because people are using it. For instance, it's difficult to find two aircrafts collide. Yes, it's happened before. I think I watched a documentary where two aircrafts collide. But it's very rare these days. You know why? All the pilots are using the same radar. Okay. Yeah, so they hardly collide. In the same way, if you're a trader and you know how to interpret the technical tools, because a lot of people are using it, you always learn to be on the right side of the market at the right time. It's just like two pilots being on the right side. They will never be on the wrong side. Why? Because they're using the same radar. In the same way, because people are using that same radar, this Fibonacci levels, it helps them to take profits or put their stop losses, so that they're not on the wrong side of the market and expecting that price will keep going without turning. Is there any other analysis tool that's very similar to the Fibonacci? Because I know we talked about the candlesticks. No, we talked about some other tools that Sure. Another tool that is very similar to Fibonacci is called the pivot point. Pivot point. Yeah, maybe when we finish Fibonacci, we'll go into pivot point.
Pivot point. So, okay, does it have any downside? What kind of downsides should investors or currency traders, watch out for while they're using it so they don't get too carried away?
The only downside there is, like every technical tool you're using, it's not something you rely on alone. You understand? You need other tools that you use also to analyze the market. For instance, you can use Fibonacci with moving average. Fibonacci, for instance, doesn't tell you that price is going up or coming down. It doesn't. all it tells you is where would price probably turn. That's all. So you use it with other tools to give you other market information together. You understand?
Can you use it alone, on its own?
Well, it depends on the trader. If a trader has mastered other, for instance, that's what we call, what's it called now? It's like using price to determine what market wants to do. It's called price action.
Okay.
Price action is not about using indicators or whatever. It's just looking at the market, and with the way the market is behaving, the price is behaving, you know what markets wants to do. So if you know, if an expert in price action, for instance, you could use price action with Fibonacci, for instance, to determine where price will probably turn based on the action of the price.
Okay, let's look at a typical trade. Okay, it's current, trader sits, Forex trader sits down. He wants to plan his trade depending on what the fundamental news is driving the market that morning, and he decides at what time or what point will be most appropriate for him to use this Fibonacci. Okay. Compared to other analysts.
Let's look at a typical example.
Okay.
If you look at this chart I have here now. You have what we call a swing low. You can see a swing low point where we have the bottom there. Okay. And you see the straight line that goes up, and we have what we call a swing high up there. Now, when price goes up like that, it's expected that we have a pullback.
When you say pullback, meaning that
it's going to come down.
Investors are taking profit and it's coming out. Okay.
Yeah, just like last week Friday, we had a pullback on Euro USD chart. It was going up in an uptrend, and there was a pullback. It went downwards, where we thought, okay, there was a strength in the US dollars or a weakness in the euro, but there was a pullback. You always expect that kind of pullback. So price pulls back. Now the issue is this: how much pullback do you expect? Is it going to go 100% downwards? Is it going to go 50%? Those levels of pullback are Fibonacci levels.
Okay, so if I am very much familiar with the Fibonacci rule or theory, I know that it's going to come down to a particular level. I can just wait, prepare, position myself
to either place a buy if you expect that there's going to be continuous strength in that trend. You wait to pull back to that level, and because of the fact that a lot of people are also looking at that level you are looking at.
That's for those who know how to use it.
Yes, and they all place buy. You see price rallying up there. So traders who actually know how to use this don't trade blindly. They go in at those specific levels, and you will notice that price always reacts at those levels. If you check it, if you check the next chart we have there, you will notice that after that price pulled back, it pulled back at a 32.2% Fibonacci level. You know, if you check.
So if I was a trader and I know how to implement or identify this particular rule, I would be expecting it at that time, at that space, and I would wait there.
You see that at the 38.2 Fib level, you can see that price pulled back and went higher. So a trader who is blind would think that the price is going to keep coming down, but those who have the Fibonacci can actually know that there is a probability it's going to pull back at any of these levels.
And you say it's accurate, it works 70% of the time?
At least we can say average the Fibonacci works.
Because if you're saying 70%, that's
but your capacity to interpret is where your judgment. But most of the time when you put your Fibonacci retracement or extension indicator on your platform, you notice that there's always reactions at Fibonacci levels in the market.
So how long would it take perhaps an amateur trader or someone who's just starting out at the market to learn this? Because I'm sure the viewers out there are wondering, okay, this sounds like a fantastic analysis tool. How soon can I learn?
The thing about Fibonacci is that initially when you start looking at it, it looks complex. It looks like,
but you make it sound simple.
And sometimes it looks like you need a lot of faith to use it. Because you must believe. It's like you have to believe.
Is it about belief for knowing that because you plotted it because
you plotted
it has a certain trend,
but you have to understand that
something.
You have to understand that while you are plotting it, you are plotting for the future, not the past. You use the past to then plot it for the future. So at the time when the price is going to react in the future, you don't know what's going to happen yet, but you expect, you believe.
You're just generally optimistic.
Yeah, that is going to happen. And
isn't that a risk?
That's a risk. Just like the way faith works, is that when you use it most of the time and it works for you most of the time, then you start having more confidence in your capacity to interpret and use it. So if you don't exercise yourself in using it, you won't develop the belief enough to be able to say, oh, price is going to react here, and it keeps working for you.
No, because many traders might ask, is it about belief or faith or the fact that it has a track record? It has, it's something I can rely on to give me a certain...
Believe, I don't mean your belief is going to make it work. No. Okay. You see, for you to take the right step, because a lot of traders freeze sometimes when they're supposed to take action. Okay. And it's because of self-doubt. Okay. Yeah, what gives you confidence to take an action? I'm just using the word believe, but it's like that confidence to take that action is that you understand that that concept works. But you will not understand it until you use it most of the time. But the more you use it, the more you see it work, the more confidence you have, or the more belief you have, and the better it works for you.
Okay, so back to my question. I'm an amateur trader. I've gone through your... Okay, you said that it's part of what Alpari would teach or teaches at the basic class.
No, you see, Fibonacci is taught at the basic. What we're looking at right now is basic Fibonacci.
Oh, is it
on Wednesday when we come in, because I expect people who are watching right now to also try and watch it on Wednesday.
Yeah, perhaps I'm sure they'll have questions.
Yeah, on Wednesday we're going to be looking at it on the live market.
Okay,
we're going to be like right now. I'm just showing you charts. These charts are maybe 2 years ago, 3 years ago. I'm just showing you examples of Fibonacci at work.
Okay.
But that day we're going to be using Fibonacci to actually do live market analysis and use it to look at what market is going to do next week, look at what market is going to do next month, look at what market is going to do this year, try and look at support and resistance levels for this year with Fibonacci. So what I'm just trying to do is I'm trying to lay a foundation for those who might not know what Fibonacci is, so that by the time we come on Wednesday and we start analyzing and looking at it, you know, it not be 100% new to them. You understand? So that we're going to have like a series 2 of what we're talking about right now Wednesday. More practical, live market, looking at, you know, for the whole year, taking maybe Euro US as a currency pair, you know, and use Fibonacci to actually analyze and see what price is going to do this year.
Okay, any other information? What else can we learn from this Fibonacci? Have we looked at the price?
Let's look at extension example.
Okay.
If you look at my chart on Fibonacci extension, you see that price had what we call a rally up. You had a rally up, then it pulled back. And if you check that pullback, you also pulled back at the Fibonacci level.
Okay, that's what we're looking at. Right?
Yeah, there's a pullback at the Fibonacci level, you know. Now, price went up and broke the high. You can see the price would have, you know, would have been good, and it broke that level. Now, how do you know how far up price is going to go? Then you use what we call Fibonacci extension. You know, now those tools, it's not as if you have to go to your chart and draw the lines and calculate. No, the trading tools that you use, your trading platform, your trading software, actually has these tools there. So immediately you plot it on your chart, you see those extensions, you see those retracement levels, and if you know how to interpret properly, you know where you put your stop losses and you'll take profit. If you look at, you know, the next one, let's look at the next chart. You will see that after price broke that high, it went up, and you can see that it retraced at the 1.618 Fibonacci level up there.
Can you break that down, make that sound more simple? At what was it? The currencies trading at that point, one currency was on the lead, or at some point investors decided to take profit or something?
Let's assume we're looking at, like right now we're looking at the USD CHF chart.
Okay.
Right? US dollar is strong. There's an uptrend. Price pulled back. Just like what's happening right now to the Euro USD. Euro USD has been an uptrend. Then it pulled back. Right now, we are going to plot what we call Fibonacci extension to know how far high into the future the Euro is going.
Okay.
You want to know how far. So right now, for instance, you plot a Fibonacci extension based on where price has been throughout maybe last 2 months. Then you now use that to predict what price is going to do, you know, maybe the next 2 months also.
Okay.
You understand? That's an extension. Extension actually means you're extending to the future in an uptrend. Okay. Retracement means you're trying to look at pullback levels, where price, when it pulls back, you're going to look at.
Okay, so is that all we can for now? You want to keep the rest under your hat, or you want to?
No, you know, like today, I'm just trying to, you know, show how Fibonacci works, what it is, you know, and actually how to plot it on your chart and things like that.
Okay. Well, I have been talking to Michael Akinwale. He's a currencies analyst, and we'll be looking at a very interesting market analysis tool for currencies traders at the market. It's called the Fibonacci, and of course, he has been talking about how you can properly implement this particular tool, helping you to decide when to take profit and when to retreat, as it were. Now, just on a programming notes, just to tell you that we will be hooking up live, having a live coverage on the presidential launch of Public Works Women and Youth Empowerment Program. It is going to be taking place at the banquet hall of the Presidential Villa in Abuja. We'll take a short break now, and we'll be back with the rest of the program. Please join us again.